Welcome to Zone Americas. Few words about myself, Laurent Freixe. I'm a Nestlé native, started 30 years ago with Nestlé, and the last 8 as a member of the executive board, 6 years heading Zone Europe. Easy to remember when I've been appointed. That's the day, almost the day when Lehman Brothers collapsed, midst of the crisis, and I've been heading Zone Americas in the last 20 months. On the menu today, the main course will be, as should be, Nestlé US, by and large, our number one market globally, and I'll show you how we have been capable to reignite a strategic virtuous circle of profitable growth through fueling innovations, and I'll conclude on a sweet note with an overview on the rest of the zone. There is a good momentum in the business. We have achieved last year 5.5% on organic growth and an improvement of 80 basis points of the trading operating profit, which has been much welcomed in the context of a few negative one-offs. And the momentum continues into 2016, with, which is worth noting, an acceleration in the volume mix component of the growth in the context of deflationary pressures and less contribution from pricing. What is the state of the nation? I'd like to highlight how big is the stake for Nestlé when it comes to Nestlé in the Americas. I like to highlight that with 3 numbers. Nestlé in the Americas accounts for 44% of the group net sales. So that's a big stake, but it's also accretive to the group. So when it comes to the trading operating profit, this is almost half of the trading operating profit which is generated in the Americas. And the last number is, of course, extremely relevant. That is highlighting what is the percentage of our net sales where we are in a leading position. So we got 87% of our net sales, number one. If you look at number one, number two, 95% of our net sales. That's certainly an industry benchmark. There is an acceleration taking place in North America, which is much welcome. That's 60% of the zone. In a context where Latin America is under recessionary pressure, we got a few key geographies like Brazil in recession. The good news is that Mexico and Chile are strong and resilient, that those have traditionally been very strong markets for Nestlé, and Brazil, that's good news as well, remains competitive in a tough environment. We are gaining market share in Brazil as we speak, and I like to highlight, this is more for the medium-long term, an opportunity which is Cuba for Nestlé. It's worth highlighting that we have been operating in Cuba in the last 20 years with majority stakes in 2 joint ventures, and we are discussing as we speak an extension of our portfolio with the Cuban government. So what is the vision for 2016 and beyond? We want to drive market share in a context of lower growth, as we will continue to operate for the foreseeable future in a relatively low growth environment and in a context where there is deflationary pressure. In North America, because of input costs deflating, in Latin America because of the recessionary pressure. So the focus is on market share. If the pie is not growing, we want a bigger share of the pie to be able to grow. We want to put emphasis on the volume mix. We want to put emphasis on North America, but LATAM's contribution, of course, will remain critical. Few words about the economic environment. You know better than me, but I just would like to highlight that, as you know, if there is one engine to the global economy, that's probably the US economy. The point to highlight is that this is true at macro level. Now, if we look at it at micro level, as salary moderation has prevailed in the US, the consumer markets are not necessarily as buoyant as that, and I will highlight it later on. And then, as you know, LATAM, all LATAM economies are commodities dependent. and they have all been impacted one way or another by the end of the commodity super cycle. And we see, of course, as you all know, a deceleration in economic growth across the continent, maybe with an exception being Mexico, which is pulled by the US economy. What are the external forces shaping the industry? Those are not America's specific, but of course, big food being under pressure is relevant in the US with the millennials. It's also extremely relevant in Latin America because of the regulatory pressures on labeling and on product formulation. The digital disruption is taking place largely in the US, and the millennials also is a massive impact. That's a group of 87 million. In the US, this is bigger than the baby boomers. They have a big impact. We know that they have a different view on what is nutrition, health, and wellness, and majority of them would pay more for natural and organic. That's the name of the game. They want to discover new foods. They are largely foodies. They want to know what is behind the brand, how it's been sourced, how it's been manufactured. Does it apply ethical principles in the sourcing? And they like to share, to post reviews on what they eat. So what's happening is that we see a profound change in the way people eat, in the way they shop, and in the way they engage, and that is critical to be taken into account if to stay relevant. NHW, nutrition, etc., is being redefined. A little bit like in Europe a number of years ago, people are moving away from dieting and now natural, organic, and positive nutrition, a more holistic view on nutrition is in. Time constraint, as we know, that's not necessarily new, but it's good to highlight that 90% of the people are snacking multiple times, and when they prepare the meals, this is in less than 30 minutes. Food is globalized. It's particularly visible in the US in a context where among the millennials, the minorities are the majority. 52% are multicultural, and of course they find exotic flavors appealing. Changing the way we shop, convenience stores, proximity is on trend, e-commerce, digital options, of course. Personalization is the name of the game, and pure continues to grow, pure natural, but the main point is that this is now mainstreaming, and we got Costco, Kroger as main players, but basically every retailer is bringing that on board. The way we engage also is changing in a context where there are so many platforms on which to engage, multiple devices. It's amazing to see that people in the past were spending 4 or 5 hours on TV. Now they continue to spend 4 or 5 hours, but on the top, they spend 5.5 hours on digital. They got multiple screens when they watch TV. And everyone creates contents. Many people have got blogs or are posting reviews, and amazing to see what is the amount of exposure of a US consumer. If you take outdoors, that's 15.5 hours of media exposure a day out of work. So that's basically, people are always on. Strategy in the US puts, obviously, NHW and innovation at the forefront. We have put a major emphasis on quality. We have been reinvesting in quality, put a big focus on product improvement, 60-40 plus, and the quality and the strengths of the pipelines, innovation pipeline is in the focus. And of course, executing with excellence is also very much at the core, very much in the focus. On NHW, we have taken a number of bold and strong commitments, reducing sodium by 10% by 2017. We are improving the quality of the fat. We got 100% portion guidance on all our products this year, remove completely the artificials, and we are committed to improve the percentage of our sales achieving 60-40 plus, so product superiority with nutritional superiority year on year. We are communicating those advantages on the pack, on the label, like you can see on Natural Beast, or like on Coffee Mate. Reduced 25% the sugar in Nesquik. It's visible. Improvement also in the pizza arena. And we are leading the industry's agenda on physical activity with the Boys and Girls Club of America, leading the agenda on GMA and engaging with key stakeholders on NHW. The pipeline is very strong on all core dimensions. Healthy contemporary meals, pure and simple has been embraced, and I'll show a few interesting examples. We are also active on meals, the small meals, the snacking, with the cups, with hot pockets, and we are embracing also increasingly modern cooking. There are a number of innovations in the pipeline for Stouffer's. We are focusing as well on high growth channels. We want to grow in the channels that are growing, so you can see the CAGR achieved in the last 3 years, and focus is there on club stores, on the dollar stores, digital growing close to 40% in the last 3 years, and the focus is there. Regional players and Hispanic, of course, are in the focus at any time. Digital capabilities have been also very much in the focus. We got digital acceleration teams. We got a Silicon Valley outpost building up the ecosystem in the valley. We are engaging with consumers offline, but also online, and the communication spend is more than 40% on digital today in the US, increasing by more than 40% with great returns. So one of the major highlights is that we have been turning around frozen food in the US in the last 18 months. We have been focusing on increasing the relevance of Stouffer's to the consumers, bringing new health also into the range with high proteins, for instance, like the Fit Kitchen range, creating transparency on the label, on the pack, on what is in the product, modernizing the benefits, redefining meal occasions with the meals, and segmenting strategically. And the big move, certainly one of the big moves, has been on lean cuisine, which we have brought back in tune with consumer values, moving away from dieting. You can see how strong is and how impactful is the shelf appearance. We got clear 60-40 winners. We have reinvested in the quality of the products, integrated the new health benefits, organic, natural, gluten-free, and as well have engaged in a new communication with real people, and it's coming up. Real people, real food. I just would like to highlight how much is the focus, and that's a good example, on achieving clean and simple by design. That's on the left, you got the recipe of a lean cuisine of before, and on the right, you got the recipe of the new lean cuisine, and you can see that these are kitchen cupboard type of ingredients, a lot simpler, a lot more straightforward, understandable by the consumers. And I like to show the new communication, which I think highlights very much the change that has been brought. That's real food for real people, and it's a real nurse who is featured in the communication.
I'm working when you're sleeping. A lot of moms come in nervous. They look at me, they say, I can't believe I did this. I say, I told you you could do it. It's just a normal thing that happens at 3:23 a.m. And you finally get a minute to yourself to just breathe. I try to live a healthy lifestyle, and lean cuisine's really changing it up so I can eat the way I want to eat.
Feed your phenomenal with the new lean cuisine.
Real people, real food, very successful, real success. We apply the same approach with ice cream, high quality ingredients with transparency. We leverage also our technologies. We got this slow churn technology that allows to offer outstanding quality products with 50% less fat, real fruits and vegetables in our chain, and agendas, and that's in the DNA, in the roots of the brand. We keep on developing through clean and simple by design. Coffee Mate is a great story as well of continuous innovation, building up from strengths to strengths. That's the last 25 years, and you can see that the brand franchise has been multiplied by 15 in that period of time, from a $100 million brand, which was already sizable in the US 25 years ago, to a 1.5 billion brand, very profitable, and still growing nicely year on year. The result of all this is that while we were trailing our category, so every point on the line is a 52 weeks market share point rolling, and you can see that 18 months ago, 15 months ago, we were trailing our categories. We have catch up big time to be now leading our categories. Same applies to pet care. That's our number one category in the zone. It's a major category also in the US. We are putting a lot of emphasis on being relevant, and you will see the power of the range which we got. We are restaging the Dog Chow as we speak, featuring our people. Those are our people. He's an operator in the Flagstaff factory, featured on pack, explaining the pride he's got to manufacture Dog Chow in the US, and we also highlight naturalness. We are restaging as well Beneful, which, as you know, has been under pressure in the last 12 months through clean label, and we put real meat as the number one ingredient. So that has been a real effort to renovate the brand and invest massively in quality. I'm pleased to report that even ahead of the relaunch, the brand has been growing in the last 2 months. Beyond is a major move as well to enter mainstreaming in the natural segment. And I'd like to highlight the recent acquisition of Merrick, which is a jewel, and which is today the fastest growing brand in the industry. And we have a real pricing power. We have a real capability to create value. In that category, you can see the Friskies products at the bottom, sold 10 cents, and you can see that the premium we can command through innovation. That's not a 20% premium. That's not a 50% premium. That's not a 100% premium. We are capable to multiply by 4 to 6.5 through Muse, for instance, or through purely Fancy Feast, the pricing of our product. That's the power of innovation, and this is the drive we got across the category. And I'd like to show also that, because we talk about big food, and I'd like to highlight the new Purina communication, which highlight that big pet food can be good, and the communication speaks for itself.
They say big like it's a bad thing. They say big is old, that it moves too slow. They say big can never be good. Purina believes it can. And together we're making a big difference in the lives of pets. Inspecting every ingredient for quality, that's good. Being confident that your pet's food is 100% safe, that's big. Helping your old dog think more like he did when he was younger, that's amazing. Celebrating one more birthday together, that's big. Big is exciting. Big is daring. Big is for everyone. Everywhere. Every day. Pets don't just make life better. They make it bigger. Purina. Live big.
And Purina is indeed showing that big can be good. And I'd like to show as well, which is interesting in our strategy, that small is beautiful with Merrick.
I'm Garth Merrick, and this is Gracie. I think she's the best dog ever. I know a lot of other people feel the same way about their dogs. So we started creating recipes in our own kitchen for food worthy of those dogs. Then we built a bigger kitchen to make those recipes. And now we'd like to share them with your dog. The best dog ever. Deboned meats always first. From farmers we trust. Made in small batches. The best dog ever deserves Merrick.
And in LATAM, we basically follow the same path, leveraging the trends early on. Premiumization, the coffee shop at home. We have rolled out in the last year Nescafé across the region. We are leveraging also the trend towards natural with the fitness and Nesfit brands across LATAM. We are also integrated the new health arguments with a big drive towards lactose-free, and of course, Speed Scratch with the Maggi brand is very much in the focus with juicy chicken, and as well the new innovation which is called Jogoso al Sartén. That's a pan solution, which of course is even more relevant to LATAM, where pan cooking is the main form of cooking. We are as well putting a big emphasis on Nestlé being an employer of choice, partnering with the youth, partnering in a way with the millennials. So we have a big drive. We have rolled out the youth initiative across the continent, and we see big impact in terms of the way Nestlé is recognized by the new generation as an employer of choice, but also a tremendous motivation internally. And it gives us the opportunity as well to bring on board the millennials who will help us, the digital natives, help us to shape the future of the company. I was last week in Lima in the context of the first Youth Forum of the Pacific Alliance, which we are co-organizing with the Swiss government and the 4 Pacific Alliance countries, and signed up on this occasion an agreement with the Minister of Labor of Peru and the Minister of Education of Switzerland. At the end of the day, just to summarize the spirit of what we are doing in Zone Americas, we are putting the focus on reigniting a strategic virtuous circle of profitable growth. There is a big focus being put on efficiencies, portfolio strategy, which François highlighted. There's a big focus on cost optimization and simplification. We got goal alignment applied across business units. Every business unit has got an operational master plan. We got 100 lean value stream initiative. Every business unit has got a lean value stream initiative ongoing. There are projects of structural cost optimization across markets, and we basically focus on achieving a 5 to 6% total delivered cost improvement every year. This is what we achieved last year in the high end of the brackets. And there is a big focus as well on capital efficiency and on all 4 levers of the trade net working capital. And you will see significant improvement coming from the region. That allows us to generate the fuel for the growth and to invest behind a robust INR pipeline based on global initiative, regional initiative, and local initiative, because we got in the portfolio a number of iconic local jewels to achieve market share gains while focusing on the high growth channels and digital, while, and this is also one of the impacts of the strategy virtuous circle, meeting our commitments with society, which, as we know, millennials, for instance, and society is more and more concerned about, and there is a focus on the triple bottom line: economic sustainability, social and environmental sustainability. And the numbers speak for themselves. We have been capable, after a couple of years of market share losses, to bring back the zone into green territory in 2015, and we continue to grow a share and to lead our categories across the continent, with 7 out of our top 10 markets gaining market share as we speak. So what are the key takeaways? We are reigniting a strategic virtuous circle of profitable growth with putting innovation in the focus in line with the consumer trends. We are winning with the consumers and with the customers as we are gaining market share in the US and across most parts of the zone, across most categories, 7 out of the top 10 markets, including Brazil, which is under tremendous pressure, as we know. And we are generating profitable growth, 80 basis point trading operating profit improvement last year on a high base already, 20 basis points improvement in the US in a context of reinvestment behind the brands to be able to reignite this strategic virtuous circle of profitable growth. With that, I'm getting to the end of the presentation. And the good news is that we got half an hour for the Q&A. So with that, floor is yours.
Please, first question.